Hi there, I'm Andrew Lockwood, Head of Education here at Funded Trading Plus. Now today, we're going to do another one of those account reviews from one of our traders. Now his name is Anthony. Now remember, all our funded trading programs run in a simulated environment using virtual funds. There's no real or regulated capital traded, and any of the payouts are calculated from the simulated profits in line with our program's terms and conditions. Now this account review is intended for educational purposes only and shouldn't be considered as financial advice. You ready for this? Come on, let's get to it. Okay, so here is Anthony's trader dashboard. You can see it's a 50,000 experience throughout one phase, and he's passed this. So he's now on live simulated money. Any money he makes in the markets, he can withdraw, minus of course the profit split. So congratulations there to Anthony. Okay, so let's delve a little bit deeper into exactly how he achieved that success. First off, I always look at the days since he started, how many days it took him to pass the assessment. And it took him 52 days. Now, that is a good time period. That shows to me that he didn't just do this in a day, although of course with our assessments you can do that, but it shows to me that he put some work into this. It took him, that's 52 days, that's almost 2 months to pass the assessment. Shows to me that he wasn't necessarily gambling, he had some method to his theory, as it were. But look at this is absolutely outstanding. He's had 206 trades and he's won 200 of them. Now I have been in the markets, well, since I left school many years ago, but I've been on the trading screens since about 2005. I've never seen a track record like that when it comes to trading. That is almost just non-stop winners in 2 months. You've got to be doing something right to get that. He's only lost 6 losing trades. We'll delve a little bit deeper in a moment and see if there's any flaws in this, but at the moment that is looking really good. And of course he hit his high watermark of 55,000. Of course that is his 10% achieved, and that's why he's now on the live simulated funds. But again, I like this. This is this average winning trade. So his average winning trade, only $25. Okay, $25. It's not massive risk that he's doing there. And his average losing trade was only $14 on closed out trades. That shows you that his winning trades are far bigger than his losing trades. That in itself is pretty impressive. And you can see here that it looks as though he's only trading the euro against the US dollar. So of course we have to delve a little bit deeper to see exactly what's going on here. Look at the equity curve. Slightly concerned here with the equity curve. The purple line shows you his trading balance and how it grows. The balance of course is the closed out trades. The equity of course is the open trades. The equity is this like cyan line, the blue line, light blue line. Okay, so here we do have a bit of a concern. He had a bit of a drawdown. Now look, drawdown is nothing wrong with having drawdown in trading. All traders have drawdowns, but drawdowns have to be controlled. And indeed, I think it was controlled here, or maybe he just was quite fortunate. Well, I'll show you the details in a moment. But drawdown is not a dirty word. All traders have drawdowns. It's managing drawdown and accepting drawdown and having an acceptable drawdown in relation to the profits that you can achieve. But that's a really nice steady equity curve. And just looking back at the trades here, you know, obviously we know he's had a whole bunch of winners, but even these trades here, you know, this is $87, $67, you know, this is like 0.02. He's scalping. So that, as I said, he's in and out of the markets several times a day. You can look here at the day. This is back in July. You know, he's holding some of these trades. He bought it at 93 and sold it at 93 and bought it back at 87. So it's just 6 pips he's taking there. So he's not taking excessive risk because he knows he's going to be in and out. He knows he's going to have losing trades. And that basically was like that all the way. Not seeing any massive problems there at all. He's taking profits. He's chipping away. He's scalping away. That's exactly what you need to be doing as a scalper. He took in some really small trades in here as well. He's using controlled lot size, just doing exactly what scalpers doing. I don't know if he's trading this on an automation or not, but this has given me a little bit of a concern now. Okay, and I had to sort of analyze what was going on here. So where he's taking these profits of $50 and 30 bucks and so forth, all of a sudden he's had a $600 winner and a $250 winner. All these other trades are sort of like hours, 4 hours, 5 hours, 52 minutes and so forth. But then this trade here, these trades here, well, that one lasted 8 days. The alarm bells maybe are sounding off there. Why was he holding that trade for 8 days, and how come he had such a big win there as well? When you're trading, when you're scalping, you really have to have really strict discipline. But basically where you cut your losses and just churn out the winners. I thought that win-loss ratio was absolutely fantastic, but made me think, is that really possible? What's going on with the trading? And I'll show you now on the charts what I think was maybe a bit of an issue going on here. Let's have a quick look. Okay, so here we are on the euro dollar. I've got it set on the 1 hour chart. I would have thought Anthony is possibly looking at a lower time frame chart, seeing that he is a scalper. The first trade we want to look at is basically this one here. He's bought one lot at $15.95 on the 29th of the month, which is about here. Now, normally by looking at Anthony's trading history, he would have taken 5, 10, maximum 15 pip profit on his trades. He'd have been getting out somewhere at around there. But on this occasion, the trade went straight into drawdown with this big red candle on that 1 hour chart. Okay, now drawdown is not a problem. All traders have drawdowns. Any trader that tells you he doesn't have drawdown is not telling you the full story. We all have drawdown, but it has to be measured, it has to be controlled, and it has to be relative to the profits that we have as well. And of course, trading the prop, he's got a 6% permitted drawdown. He didn't even come close to that on this occasion. Now, my thought here is that he wasn't actually maybe using stops, which allowed him to still be in that position when we had that big red candle. And then we recovered slightly back up to here. He didn't get out of the trade. He held the trade. Remember, this trade was actually held in the end 8 days, I think it was. And then we had a pullback. But here's what's significant. The next day, on the 30th, the euro dollar plunged. Actually plunged at about 160 pips. It's a big drawdown. 160 pips basically created this, and you can see this blue line is the equity. That's the open trades, getting very close to the permitted daily drawdown, which on this account is 4%. So he got very close to blowing up the account, from blowing up all that hard work he'd done in the previous month or so, grinding out those small gains, doing really well. He got a smidge away from losing the account, and then the market went into consolidation for a while, and of course obviously we had this big spurt up, which he must have been quite relieved about. And then we had the pullback, and it's here that he entered this trade. So now he's got a two lot position in the euro dollar. He's now taken on much bigger size. Okay, he got out of this trade within just I think it's about 2 hours. He got out of that trade and he banked $600 profit there, and he's still holding this trade here, which he eventually sold over there 8 days later at 16.29 or something like that. So he got out of that trade for a $253 profit. So as I say, my assumption there is that he's not actually using stops. On the surface of this is not bad trading. He controlled the drawdown against the permitted drawdown. Bit concerned about the daily drawdown. Maybe he had stops just below, which would have stopped him from being knocked out on the daily, or maybe he didn't, maybe he just got lucky. But I just think, you know, with all those trades, 206 trades, 200 winning trades, a lot of work gone into this before he got to this level, he got very, very close to the line. I'll let you be the judge on whether he got lucky or indeed it was all calculated. But anyway, congratulations to Anthony. You're now live with a simulated account, and the profits you make now are yours for the taking, minus the profit split as well. Congratulations, Anthony. Okay, so I hope you found that useful. Now, if you are a trader with us here at Funded Trading Plus, trading in our simulated environment, or perhaps you're trading in the live simulated environment, or maybe you've taken a payout in the past from the virtual funded accounts and you want me to review your account, just fill in the form in the description below and I'll get right on it. Thanks for watching, and I'll see you in the next account review video.